Today I'm going to go over the 5-minute opening range strategy, but first I want to go over a few rules that you need to keep in mind as you play the strategy. So the first thing to know is there are 6 rules to follow. The first one, rule number 1, is to keep it simple. You need to keep your chart as simple as possible. The strategy needs to be simple so you can follow it and be consistent. You should not be using any moving averages, no indicators, no busy charts. It needs to be very clean, just price action and 2 lines. Rule number 2, trade only between the hours of 9:30 a.m. Eastern Standard Time and 11:30 a.m. Eastern Standard Time. Those are the 2 hours when the strategy works best because that's when there's a lot of volatility, a lot of volume that comes into the market. The 5-minute candle that we will refer to is the first 5 minutes between 9:30 a.m. Eastern Standard Time and 9:35 a.m. Eastern Standard Time. Rule number 3, no FOMO, fear of missing out. You need to follow these rules. Sometimes the market is very hot, 9:30 a.m. the market opens and the price just shoots all the way up. You will feel FOMO, you'll feel like you want to chase, but that is not in accordance with the rules of the strategy. Rule number 4, you need to be patient and only trade this setup, especially if you are a beginner. Follow one strategy and only one strategy. That's the best way to become consistent and become profitable. Once you're profitable and you're consistent with that one strategy and you master it, then you can add more strategies. If you keep chasing or changing your rules and changing the strategy, you will never really make it in this trading environment. It's a very, very difficult environment to make money and be consistent. And this is basically the secret. You must follow one strategy. You must really believe in it. You can backtest it, prove to yourself that you have an edge with it, and you continue to stick to the rules. Rule number 5, keep the trading size the same to ensure the consistency. You will never have a 100% win factor. However, if you keep your trading size consistent and you follow the strategy, the win ratio is more than 50%. You will have an edge. It's usually around the 65% mark. And if you follow the 2-to-1 risk to reward ratio, then every winner will get you 2 times the amount that you would lose on a loser. And so you only need to win 1 for every 2 losses to break even. Rule number 6, you need to review your trades and you need to journal. Every single trade that you take, you need to journal it and you need to review it and you need to learn from it. What did you do well? What did you not do well? Was the entry too late? Was the entry on the spot? Did you exit too early? And you need to continue to refine and improve your strategy. Now, the 5-minute opening range strategy, there are 6 steps to follow. The first step is you need to wait for the 5-minute opening range candle to close. That 5 minutes, like I mentioned earlier, is from 9:30 a.m. Eastern Standard Time to 9:35 a.m. Eastern Standard Time. Once those 5 minutes are completed, you need to draw a line at the top of that range, and you can color it green, so it's a very easy visual to see that if it's green, it's long. You draw a red line at the bottom of that range. So again, if it retests the red line to the downside, then you know that you need to go short. The strategy is the break and retest strategy on the 5-minute opening range. Step number 4 is you need to wait for a breakout with displacement. So you need the price to break out of the green line on the top or the red line on the bottom. And you need to wait for it to push further away from those lines with displacement, meaning it doesn't just go up a little bit, but it goes with a few points away from those lines. Then you need to wait for the price to come back. That's the retest. You need to make sure that the price point retests your green line or red line, which is the 5-minute range. And then you need to wait, step number 6, for a strong candle reaction, proving to you that if it's retesting the green line, that the buyers are stepping in with a very strong green candle. Or if it's on the red line, you need to get proof to yourself that the sellers are stepping in with a strong selling candle to allow you to enter the trade with confidence. Once you see that, you enter the trade and you measure the 2-to-1 risk to reward ratio. Now, it depends on how many contracts you're taking. Let's say you are trading options and you're taking only one contract at a time, you have a small account, then you just go in and you exit at the 2-to-1 ratio. If you're able to trade more contracts and you have more confidence and more experience, and let's assume you're trading 5 contracts, then you can decide to exit 60% of your position at the 2-to-1 risk to reward ratio and keep your remaining 2 contracts to get you a 3-to-1 risk to reward ratio, for instance, or allow it to run until the end of the day if you're trading um, zero DTEs and you're expecting a flush for the whole day or for it to continue all the way up if it's on a strong trending day, then you can do that. But you need to ensure that you put a stop loss so you don't end up giving back the gains that you made on the first 3 contracts. So another way, for example, another strategy could be that you enter with 5 contracts, you exit 3 out of the 5 at the 2-to-1 risk reward ratio, and then you move your stop loss at break even. So those last 2 contracts could be your runners, and you could exit them at 3-to-1, 4-to-1, 5-to-1, whatever ratio you feel comfortable with based on the chart. And you could put just the stop loss at break even. So if it does go and reverse, then you don't lose any money and you still made your win on the first 3 contracts. That's a little bit of an advanced concept, but it's something that I wanted to share in case you are a little bit more advanced. Now let's take a look at an example. So this is SPY. This is on May 8th, 2025. If you look at the bottom here, it's 9:30 a.m. Eastern Standard Time. We're going to follow those rules and those steps for the 5-minute opening range strategy and see what happens. So if I press play, this is the 1-minute chart. So each candle is 1 minute. And we're going to count 5 minutes. So that's 1, 2, 3, 4, 5. And that candle is at the 9:34 a.m. mark. So when it closes, that's closing at 9:35 a.m. And the next candle starts at 9:35 a.m. So that's your 5 minutes. We're going to take this line, put it on the top. I like to use this magnet in TradingView, which allows the line to go exactly at the bottom or the top. So it's already red. I'll keep it red for the bottom. I'll go to the top and change the color to green. So now this is a nice visual that tells me that if it breaks the green line upwards, and let me use this for illustration purposes. So let's assume the price point goes above this green line and breaks out, then I would look for it to retrace back for a retest. And once it retests this green line, if it retests this green line, then I will be looking to see some evidence that the buyers are stepping in with a green candle, a strong bullish candle. And if that's the case, then I would enter my trade and I would target either high of day or a combination of high of day and the 2-to-1 risk to reward ratio. If you recall, I said no FOMO. What does FOMO mean? Let's assume the price actually went up, broke above the green line. Let's assume it broke here and went up and never really came back to retest the green line. This would be a no trade day because it did not follow the rules. It did not come back and retest my green line. I'm going to delete these and show you another example. So let's assume this price stays within the 5-minute range. If it just stays within the 5-minute range, then it's a consolidation day. The buyers and the sellers believe that the price is fair, and it might go up a little bit, come back down, go up, come down, go back up again. So if that's the case, then it's a no trade day again because it's just consolidating within the 5-minute range. The other one is if it goes up and just continues to go higher, then again, it's a no trade day according to the rules of the strategy. If it breaks down below the red line and keeps going down and does not retest the red line, then again, it's a no trade day. The probability of these happening is actually relatively low. Now, what we would be looking for is the following. We would be looking for the price to break above the green line with displacement, come back, retest, and then show us strong bullish action here for us to take the trade. Or for it to break under the red line with displacement, come back for a retest, show us that the sellers are stepping in, and take the trade for a 2-to-1 risk reward ratio. The best thing to do is to enter the trade with no bias. You should not have a bias going into the day because it could really mess up following the rules of the strategy. So keep the rules simple, green line, red line, wait for the breakout and the retest, watch the reaction, and then decide if you want to enter the trade based on what you see from a price action standpoint. So now let's go ahead and press play and see what happens. So right now we're waiting to see if it breaks out. So it looks like it broke out under the red line. That's bearish. But then very quickly a green candle came in and it went back inside the range. So it's still consolidating. So we will wait and see if another red candle comes in and breaks the red line. And that is a good confirmation candle. So you'll notice here that this red candle broke outside the red line with a with a bearish confirmation because it closed under the red line. You had some buyers stepping in. If you can see the wick is a price rejection. So basically the sellers pushed the price all the way down to 564.42. Buyers stepped in and pushed it up to 564.56. The next candle, the buyers continued to try to push it back into the 5-minute range, but then the sellers came in very strong and pushed it all the way out of the 5-minute range and closed the candle underneath at the 564.45. This is a very good place to enter the trade. Now, the displacement wasn't too big, but nonetheless, it did break out of the red line. It did a retest, and it gave us two red candles, both of which closed under the red line. So this is a good trade to enter. So if we put the short position on at this level, and we put our stop loss over here where the wicks are, the other pro tip here is if the price comes back up, we would not exit this trade. It would not be invalidated unless the candle on the 1 minute closes above this line. Because it could be that the prices get pushed outside of this range, and then the sellers step back in and push the price point down, just like what happened here. You notice the price went up, sellers came in. Price went up, sellers came in. Price went up, sellers came in, and then sellers pushed it down. So do not close the position unless the candle closes above this line. And now the risk reward ratio is only 0.6. So we need to push this down all the way to 2 as a minimum. And let's see what happens. So we'll press play. And we need to be patient, allow the trade to work. Okay, so no candle closure above the top line. So we're still in this trade. Just need to be patient and allow it to work. And there you go. On these 3 candles, it hit our stop loss or it hit our target, and we could have exited here. Like I mentioned earlier, if you had 5 contracts, you could have sold 3 here at the 2-to-1 risk reward ratio, and then potentially sold another 1 here at around the 3 mark. So 3, see 3 risk to reward ratio is 3. You could have sold the remaining 2 contracts here, and your overall risk to reward ratio for this trade would have been around 2.4 because you sold 3 of the contracts at 2 and 2 of the contracts at 3. So that's a really good trade, and it allows you to have one big winner covering at least 2 or 2.4 losses. I hope you liked this video. If you did, please smash the like button and subscribe to the channel. And if you want to have more of those videos, do let me know in the comments. I'm happy to support. Thank you and Hope you have a good day.